stage 2 markup. That's what my first book was all about, is trend alignment. The trends are aligned in this zone because now we have an uptrend on this time frame that's in alignment with the uptrend on the longer term time frame. So the 5-day moving average, as you pointed out, let's just go back to this screen again. So this is a 15-minute time frame. And the only time that you would, if you were to look at a daily chart, the only time you would actually see a 5-day moving average is at the close. If you're looking at the 5-day moving average on a daily chart first thing in the morning, you're looking at the last 4 days plus 15 minutes. So that's not a true 5-day rolling moving average. So in order to compensate for that, I only use it, as you pointed out, on intraday timeframes. So here on it, let's go to a 10-minute time frame because the math's a little bit easier. But you'll see, here's where that 5-day moving average is. And the price right here is 134.35. And what we were looking at here is, I've done this math a million times, but there, over the course of the day, 6:30 local time, 7:30 actually, 9:30 to 4 is 6.5 hours of the day to trade in the regular trading hours. So that is 390 minutes per day. In 5 days, there are 1,950 minutes. So the average of the last 5 days is 1,950 minutes. So when I look at this 5-day moving average I have labeled here, you can see the period is 195 because 195 times 10 is 1,950, the number of minutes in 5 days. This orange line right here is something that I created. And what it does is it just allows me to anticipate the direction of the 5-day moving average. So first thing, Monday morning, when we get a new first bar, the very first trade, this orange line moves forward to this bar. In other words, what it does is it allows me to say at what pace, when will the direction of the 5-day moving average change? Well, this 5-day moving average is going to be difficult to turn lower because we've got, unless it's back below this level right here on Monday. So it would have to go back there, and then the 5-day moving average would look like this. That's unusual to happen, but it can happen. So it allows me to, like I said, anticipate. So 1,950 minutes. On a 10-minute, that's 195. Divide 1,950 by 15, and you get 130. So that's why it's in the same exact spot. If we look at the 30-minute time frame, 1,950, well, it's right there. 65 times 30 is 1,950. So that moving average is going to be in the same spot on all time frames. Yep. Sure. This is one I was stopped out of yesterday, SoFi. This isn't my normal type of trade, actually, because I probably shouldn't even show this because of it, because it has a declining 200-day moving average. However, the 200-day moving average is so far away, and even the anchor from the